With Bitcoin dropping back most recently, what has changed with our on-chain metrics? What is the macro outlook looking like for Bitcoin? In this video, we're going to talk just that. We're going to be jumping to the on-chain data, taking a look at the most recent movements with wallets and the wallet data, how much Bitcoin is being flowing on exchanges and off exchanges. We'll be taking a look at some smart money concepts on the daily chart, and we'll also take a look at the weekly chart and see what's going on there as well. So as I get into this video, if you find it useful and informative, hit that like button. Really do appreciate that. Help spread the content to more like-minded individuals. If you're new to the channel, subscribe by tapping the bell, selecting all the notifications. You will not miss another video update. If you haven't yet joined us in Discord, though, guys, you are missing a trick. One of the reasons that I would say this is that obviously Discord is free for everybody, but if you are a member, either here on YouTube by clicking the join button down below or over on Patreon, you will be able to get access into some of the urgent alerts that we kind of put out. And on Monday, I did put out an alert, say on Monday, on the 1st of March, so that was Wednesday. I put out this information. This is something that was covered on YouTube in the afternoon, but it first went out on our server on Discord. And this is basically that the number of wallets that held at least 1,000 Bitcoin had completely kind of come down quite massively. It was a big tank. Here's what it kind of looks like on the day. You can kind of see this big movement to the downside, right? So I put this out in our Discord server for our members, either on Patreon or YouTube, so that everyone can get a good, clear picture as to kind of what is going on when it comes to the movement within wallets ahead of time. And the reason I bring this up is that it was basically about 12 hours ago that the mainstream media has finally picked up on what I was talking about 2 days ago. And you can kind of see here that what they're doing is they're talking about the addresses that are holding at least 1,000 Bitcoin and how it has come down quite dramatically from sentiment. Now, I will point out that sentiment were the ones that were being really bullish just a few weeks ago, where they were saying, the holders of, Bitcoin, they were accumulating these whales were accumulating Bitcoin. Well, they've kind of flipped on that very, very quickly. And this is because they're cutting the data to suit a narrative rather than actually being true to what the data was saying. On this channel, we've been saying the same thing consistently for months, whereas other people and other platforms, essentially they're going with whatever the sentiment is kind of feeling, ironically. And they're kind of cutting the data to kind of suit a narrative. So just be really, really cautious with that. There's a lot of stuff that goes on in the space. Some of it just simply doesn't make any sense. And it's important that you kind of follow the data in its most true and purest sense, because otherwise potentially you end up getting pulled down the wrong garden path. Now, essentially what we saw with sentiment was this narrative that whales were buying, and here we are just a few weeks later where we have a very clear picture, and I've been saying it for a while anyway, but they're coming out and saying that essentially whales have been selling. So just kind of bear this in mind. You can't always blindly follow influence. It's important that you do your own research, come to your own conclusions, and it's probably at this point it's worth noting that I'm not a financial advisor. I can't give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts, whether that's on-chain or in TradingView, and you can make your own decisions from there. Or if better, if you have a financial advisor, you can consult them too. So yeah, that's kind of a bit of a rant, but I kind of said, it's kind of important to follow that data. I've been saying it for a while, and now we're seeing people flip on their own narratives that they were shilling just a few weeks ago. So what we're going to do is we're probably going to start things off by jumping down into the on-chain metrics and then take a look at the price charts after. So what we'll do is we'll start here, and we can see that the inflows, outflows, and the difference between the inflows and the outflows. Okay, so top right-hand corner of this screen. This is from the 1st of January, 2023. Okay, so the 1st of January, 2023, up until yesterday, and we can see that we've had 1.6602 million going onto the exchanges and 1.6527 million coming off the exchanges, meaning that the number of Bitcoin that's remaining on the exchanges is greater. Okay, 7.56 thousand. Now that's a small number of Bitcoin, admittedly. So, it is kind of neutral. However, this number is growing. So basically, this is seeing, or what we're saying here is that more Bitcoin is going onto the exchanges, or there is more supply of Bitcoin being made available to sell than there is the demand taking it off the exchanges. Now, everything comes down to supply and demand. Okay, we cannot ignore these very important facts. It's not about drawing a trend line on a chart and saying you've broken resistance or you've found support. None of that stuff really overly matters. Really, in the nuts and bolts of it, and the very foundation, it comes down to supply and demand. Supply and demand are absolutely everything. We see this in day-to-day life, whether that is with the price of diesel and petrol, all the way through to many other things, such as the so I think of things that are kind of out of stock in the supermarkets, whether that's eggs or groceries that are no longer available because of supply and demand issues. Supply and demand are very, very important, and the same concepts of supply and demand are found within cryptocurrency assets. So the supply of Bitcoin that is being made available to sell versus the demand that is actually willing to buy it. Okay, this liquidity is very, very important. So when we see it this way, and we kind of start to see that actually Bitcoin's been going onto the exchanges, well, that doesn't support the narrative that we're in a bull market. It supports the narrative that we're in a bear market, and the reason and the rationale behind this is that there is more supply than there is demand, and essentially that's not good for bullish sentiment. So we can see it here. We've been talking about it for a while now. At 7.5 thousand, it's actually more neutral. I wouldn't say it was bullish, I wouldn't say it was bearish. It's kind of neutral, but this number is growing, so we can kind of start to build a bearish case based on that if you really, really wanted to. Now, as we kind of move down, we have the Bitcoin on exchange and the balance of Bitcoin on the exchanges. I really need to retitle that. It's very difficult to kind of get my words out. But we can see down here that pretty much since the 18th of December, it's been very neutral. It's just gone sideways, right? We saw a lot of the FTX saga, and we saw a lot of people withdrawing from the exchanges. We can see that here, and then we just go sideways. We can also see here that a lot of Bitcoin has been flowing back onto the exchanges, and we are positive on the 30-day average bars. This essentially means that actually over a longer period of time, a lot more Bitcoin has been steadily flowing towards the exchanges rather than flowing away from the exchanges. And again, that would support a bearish narrative, not a bullish narrative. But again, the number is small at this point, so just bear that in mind. It could go either way if you'll just try to build a case on this data alone. Now, I'm not going to talk about the hodl waves, but for the most part, it's still very positive. Long-term holders remain long-term holders. There's a couple of shakeouts, but nothing major in there. So when we take a look at the inflows and the outflows, you can see everything kind of being matched up, married, kind of pretty equally. Nothing too concerning. Pretty common, actually, but the volume numbers are incredibly low. At 1.6 million here. And in the last bull run, the beginning of it in 2019, we had 2.8 million for the same time period. So we know that actually we're short of over a million Bitcoin in volume that was going through those exchanges. Although these numbers were also starting off very much the same, where we can see there was slightly more inflows than outflows. So we're in a very similar kind of situation where there were transfers of wealth occurring. But what we were not seeing is, or what we're not seeing right now is the volume that was going through then going through now. Okay, we are short of that volume by a pretty substantial amount. So to think that we are bullish without that kind of level of volume going through is also quite a difficult thing to kind of see. But as I said, still, this is only talking about inflows, outflows, supply, demand. It seems quite neutral, realistically speaking. Now, as we get into the wallet counts, we can actually see retail investors are the ones that are accumulating again. So here we have Bitcoin dust. These are the most vulnerable retail investors in my mind. They're accumulating little bits of Bitcoin here and there, but ultimately these are the ones that are probably going to be the first ones to get shaken out. Now, we saw 100,000 wallets decrease recently. That's this drop here, and we're now seeing that starting to move back to the upside. So again, we'll look into this and see whether these guys are going to continue to shake out, whether they are risking it for a chocolate biscuit or for whatever reason. But essentially, I do think these guys are going to, unfortunately, succumb to selling pressure as price moves to the downside. In fact, this may already occur because I do not have today's data yet. And technically speaking, the price of Bitcoin moved down at 1 a.m. UTC. So I do not have the data on the reaction of the wallet counts until tomorrow on that front. So it'll be interesting to kind of see what goes on there. And now when it comes to the shrimp side of things, or more specifically the retail investor side of things, we can see Krill, which is over 0.1 Bitcoin, shrimp over 1 Bitcoin, dolphins over 10 Bitcoin. We can see a pretty interesting thing with the lower end retail investors. We can see that the Krill's been accumulating. We can see that there's a little bit of accumulation with the shrimps, but nothing major. And we actually see see the dolphins selling a little bit here. So we can see a little bit of a decrease there. Now, when it comes to the whale wallets, or more specifically institutional grade wallets, what do we see? Well, we can still see there's a little bit of, a little bit of an uptick here with the sharks, but it is absolutely minor. They've been taking profits after doing a fantastic trade to the upside. Sharks, in my opinion, are the traders. Over 100 Bitcoin or more. They accumulated massively up here ahead of the surge to the upside. Since the price moved up in January, February, they've been taking their profits. So you can see that quite clearly here. They accumulated way before the price moved up. Now, over on the whale side, over 1,000 Bitcoin or more, yes, they've been dropping down into new bear market lows in the number of wallets that hold over 1,000 Bitcoin. This is not something that is new to the channel. This is not something that's just happened out of the blue. This is something that has been happening for quite some time. Here is a 365-day view of these particular wallets. So when I was starting to see all this bullish narrative and we're seeing all these analytical firms saying that whales were accumulating, I was calling it as what it is, absolute bullshit, because essentially this is the view of what is actually occurring and has been occurring all the way over since here in March of 2022. So for a year now, they've been doing nothing but selling on retail investors. Now, what's important about this view right here is essentially that this was the June low that a lot of influencers were talking about the bottom being in. And I still see comments on the main channel now. June was the bottom. If it wasn't for FTX, you know, that's just a lower low. June is still the bottom. Clearly, June isn't the bottom because the November low is lower than June. So November is the current bottom. So, you know, no matter how you're trying to want to spin that, June was not the bottom. June was also not the bottom for a very clear reason. Only retail investors were buying. What were these whale investors doing? They were selling into that pump and to the upside. Okay, now FTX, we kind of knew that was going to happen because we were watching the data and we monitor these things every single day. And when you see anomalies, you can kind of pinpoint things and then you can investigate further. So we kind of were able to illustrate that FTX was in trouble and we should probably be shorting FTT way ahead of the rest of the crypto space. Again, join the Discord, join the membership if you're looking for that kind of stuff. But essentially, you can kind of see that November low came in. And what was happening during this November low? Well, the whales were selling. So again, does that support a bullish narrative? Fuck no. Okay, so as we kind of look at this, we can see that basically they continue to sell as we go sideways here. Even as price goes up, they continue to drop down. Now, they are not selling the bottom. Okay, that is not how these large players, these institutional grade players operate. They do not just gift their money to retail investors. The bottom clearly is not in. Okay, so as I come back over into our Bitcoin wallets, what do we see? Well, we can still see that the Kraken is accumulating, and the Kraken-sized wallet basically in a bear market accumulates with one sole purpose: to flood the market with excess Bitcoin, increasing the amount of supply that is available, thus bringing the price down. Okay, so as I said, everything comes down to supply and demand. And if you're able to do this to a market and flood the market with excess Bitcoin, well, it's no surprise that the Bitcoin bear market bottom comes in when such an event occurs. Right now, for these size wallets, what's occurring? Well, they've been accumulating during the bear market, like I did back in 2018, and they're yet to flood the market. Keep a close eye on these guys. We do not know how they're going to operate next, but I have a hunch that they're going to do something like this. Okay, so all in all, when we take a look at this data, the data doesn't give us the volume profiles that we'd expect of a bullish market. So no, I don't think we're in a bull run. And we do not have the wallet data that supports us going into this bullish market. Now, one of the things I would say, what happened during the start of the 2019 bull market, or the end of the bear market, the start of the bull market, right? 2019. We can see that when we take a look at the whale wallets, okay? So a lot of people were saying, well, wasn't the 2019 bull market started from retail buying? Not really, no. I mean, yes and no to a degree, and I'll show you why. As we can see, basically from September 2018, there was a little bit of accumulation when it came to these whale wallets. And it really started to ramp up in October of 2018 here. And we can see that during this flat period, this orange line, it's going sideways. We see a lot of buying occurring when it comes to these whale wallets, right? This is flat, okay, even though there is buying occurring. That is because there's equal buyers than there are sellers, okay? So if we take a look at the retailers, we can see the retailers were selling into the bear market low, Okay, they started to accumulate just before the actual bottom came in, just around here on the kind of 2nd of December. Okay, they're only doing this because they've already purchased, oh, sorry, they've already sold into this dump to the downside, right? So they feel that they've done the right thing and they start buying here. They were starting to buy before the bottom came in, just fractionally and just marginally. But by this point, the transfer of wealth had already occurred. We saw all this Bitcoin being sold, and it was being sold to these whale investors, right? Even though the bear market bottom hadn't yet arrived, okay? So we can see that that was occurring. It all comes down to supply and demand, and it comes down to liquidity. In order for someone to be able to buy in large volume, they need someone to sell in large volume, right? So in order for the price to kind of stay static like this, we have to appreciate that there's buying and selling occurring in this range, and we can quite clearly see when we take a look at the wallet counts for the different size wallets that the 1,000 BTC wallet size was increasing in the number of people who had at least 1,000 Bitcoin, whereas the number of people who had at least 1 Bitcoin was decreasing during this time. Okay, then we compound that with a flood of the market bringing in an actual low before we move on further, making sure they shake out any weak investors from the market. So where are we right now essentially is on that journey. We are waiting for our retail investors to start selling, and they're going to start selling their Bitcoin essentially to our whale investors. Okay, so did the bull market start on the back of retail investors? No, it started because whales were buying up Bitcoin from the retail investors. That's the only reason that it started. Once there is skin in the game from the large funds. Without money from the large funds, it's very naive to think that the price can move up significantly. Very, very naive. And one of the things that we have to kind of bear in mind here is that essentially prices continuing to dump, right? I say price, but the number of wallets holding at 1,000 Bitcoin continues to dump down, continues to decrease. These are players with the significant funds. Until they're in, we shouldn't really be thinking price is going to go to $100,000, $200,000, $1 million, whatever your kind of crazy ass number Moonboy is telling you. Essentially, it's not likely to happen. Okay, we need big money in. We need skin in the game before the price is going to be allowed to move in those directions. Again, we've got a Kraken-sized wallet that has been accumulating during this bear market and is yet to flood the market with excess Bitcoin. You've got to bear in mind that those market manipulators are the ones that are the ones, essentially are the ones that are going to be taking the prize at the end of the day, not retail investors. These institutional grade investors, these big funds, they're not just giving money to retail investors. Now, smart retail can trade on the backs of the whales. Okay, we can see that from time to time. But to think that we are on the right side of a trade and the bottom is in when the data doesn't support it, to me just feels very, very foolish. Not only is there low volume in terms of the inflows and the outflows, not only are we seeing more Bitcoin flow to the exchanges than is coming off the we are also seeing that there's a continuous selling pressure from the actual people that we need in the space. Okay, we need the big money in the space in order to push things up. Someone's going to be paying for the media to kind of shill Bitcoin, right? And unfortunately, those are the billionaires and the millionaires that own these companies and these media outlets, right? So essentially, there's a lot of things we have to kind of consider. Lots of different moving parts to it. Now, of course, this is just on-chain data. We can take a look at the chart data as well, and we can also take a look at the data of what's going on in the real world. Okay, there's a lot of reasons why we should not be bullish right now, and a lot of reasons why we should be locking in gains where we can and riding out the next move to the downside. Okay, I think Chris actually did a whole video on the channel, 9 reasons why we're not in a bull market, on the backs of someone doing a post about 9 reasons why we are in a bull market. Maybe you should check both those videos out if you haven't done so already. Now, smart money concept. Smart money concepts essentially does look at liquidity. It's essentially what it is. The idea here is that smart money hunts for the liquidity. Okay, and essentially it looks for areas where they can sell and buy without moving the price too much, okay? And essentially that's kind of the nuts and bolts of smart money concepts. It can be made more complicated. I've done a whole course on this. If you're looking for that, check out 𝗕𝗘𝗪𝗀𝗀𝗪𝗀com, linked in the description down below. Okay, here on the daily chart for smart money concepts with Bitcoin USDT, we can see several things, right? First off the back of all of this, we have these two fair value gaps, okay? Fair value gaps are basically imbalances in the order books. It's basically, institutional player bought here, okay? Price moved up. In fact, actually, they probably bought in a few different areas, such as here, here, and here, right? We can kind of see these kind of stacking up. Institutional buyers, okay? We can kind of see that in here. And what this means, essentially, is that gaps were left behind where there was no selling or very little selling, okay? So this particular gap was left behind because they wanted to buy here at this lower price, but price jumped up higher because there was no one selling here, okay? So the gap gets left behind. The same with this gap here. An institutional player bought down here, and they wanted to continue buying in this range, but unfortunately there was no one selling, so price jumped up higher, and the gap got left behind. When you have these gaps, price likes to come down and fill them, okay? That's not a guarantee, but it's something that you commonly see in the space. So what do we see? Well, we can see that we gravitated down. We almost filled the first one. We haven't quite got there yet. And we're starting to move back down into this fair value gap. Okay, so chances are that we're going to continue moving down. Equilibrium is an area as well that price likes to gravitate towards. It's basically essentially a 50% level on the fibs. So again, we'll keep an eye on that, but we should be gravitating down towards it. Lose equilibrium, and we should be moving down quite a bit. There's a lot of support to be found here, so it's going to take a long time. Don't expect this to be a quick kind of, oh, we're just going to drop down and be done with it. It's going to be slow. It's going to grind people out of the space slowly. It's going to cause a lot of frustration, a lot of emotions. We'll be flying all over the place. But essentially it'll be a slow process, and we'll gradually work our way down. At least that's in my opinion of it. So from a smart money concepts point of view on this daily chart, we have some very clear, interesting levels. 19,000 is approximately this one over here, for example. Now, when we come and bring this up into our weekly, I mean, we get this big block. Okay, this big block is basically $17,000 all the way through to $20,000. If we lose $20,000 as a support level, which I think we will, then we'll be heading down into these lows because this gap needs to be filled out. We'll bounce around a little bit. You can see there's areas in here that could also be of interest to us. Now, the big thing is actually this one right here, 21,480.65. This area at the moment, we have not closed below it. If we close below it, we're going to have a change of characteristic on our weekly chart that will basically signal us moving down, at least on the Bitcoin USDT chart. Okay, so we'll be looking at that. So it's an interesting one to kind of keep an eye on. Closure below 21,480 will essentially change our characteristic from a more bullish one to a bearish one. These are all minor, so I'm not overly too concerned. But again, it'll be interesting to kind of see. But you can see the gaps left behind, and on this weekly chart, it's the only gap. And it's the only gap because all other ones were filled. So we can read into that as you will. So for the most part, that's where that one sits. It's pretty decent. And we should be looking at least pulling back into this natural area. This, by the way, guys, this is pretty common. This is not anything too scary. This is a nice, healthy retracement after a move to the upside. So this wouldn't even be too much of a concern for us. So that all that is good and fine. The other thing I forgot to mention is we have a weak low down here. Okay, so our discounted area, which comes in at the low of $15,476 to the penny, which again should be a flag anyway. We have right here a weak low. Okay, so a weak low is going to be something that could potentially get broken pretty easily. It's not going to be major support for us. Okay, so just keep that in mind. We have a strong high, we have a weak low. So let's come over into our weekly view. Here we can see that we're overbought on the weekly. We can still expect some volatility, potentially even push a little bit higher in the price chart. I'm not too concerned about those micro movements, but on the macro side, we can quite clearly see we have to have a move to the downside. And yeah, so we aren't really thinking bullishly here. It's really difficult to be bullish when this weekly view is quite a bearish one. Not only have we kind of been rejected from the 200 EMA quite a bit, we also found the upper resistances and the selling order blocks. We have only a corrective structure to the upside. It's not impulsive, despite what other people want you to believe. It does also appear to be a big reset, and there's a big reset that basically means that we could see further downside of significance. I went through this the other day. Key levels of note, 7,680. Not saying that we have to go down there, but it's a key area. 9,689, again, a key area, but we don't necessarily have to move down there. 13,970, I think is the most probable, and we probably will move down there, and that's this yellow block area here. Other than that, we obviously have the existing low at 15,476. I've been calling for 14,000 for a while now, been months, even way before the actual low that we've had at the moment, the November lows. This is the most obvious area for consolidation. So if we can kind of hold this area basically between 11,600 and 13,009, then we'll be in a pretty good spot. Failure to do that and failure to have support from big institutional professional investors at this point would basically give me cause for concern, and probably more thoughts to think that we have more room to the downside, more towards $7,000 and $9,000 and all of that kind of good stuff. I'm going to leave the video there. I've been talking for 25 minutes now. Lots of things to kind of think about. Let me know what your thoughts are in the comments below. Really interested to get your thoughts and opinions on all the data as you guys see it as well. Other than that, if you found it useful and informative, hit the like button. I appreciate that. If you're new, subscribe. And if you haven't yet joined us in Discord, guys, what you're waiting for, check it out. Linked in the description below. Check out Patreon or YouTube membership, so you can easily click the join button down below and become a YouTube member and get access to all those fantastic perks in the Discord server. Until the next one though, guys, have a fantastic day.